A 10 años estadounidense. Bueno, pues hemos preguntado a Arnauld Mounier, que es jefe de desarrollo de negocios de Renta Fija en Alliancebernstein. Ha sido nuestro compañero Javier del Valle el que le ha hecho esta entrevista. Vamos con ella.
Muy buenas tardes. Arrancamos con la entrevista a Arnauld Mounier, jefe de desarrollo de negocios de Renta Fija en Alliancebernstein. Good afternoon, Arnaud. How are you?
Good afternoon. I'm very good, thanks.
Well, first of all, starting with the bond market, we are seeing how the interest, the yields, the 10-year yield is raising also in United States and Europe and are reaching new highs these days. Could they go much higher? And what does this mean also for fixed income investors?
Yes, I mean, certainly the 10-year yield that you get on government bonds in the US and in Europe are reaching levels that we had not seen for more than 10 years, almost 15 years since the financial crisis. And I think investors have been a bit surprised that we've been reaching these levels. The reality is the market at the beginning of the year was thinking there could be some rate cuts by the Fed, by the ECB at the end of 2023. And now the market has to adjust to this new reality that there will not be any rate cuts by those central banks, unlikely this year, probably more in the middle of next year, is what the market is now pricing. So the market has reacted to that, not necessarily pushing short-term yield, but more the longer end of the curve, higher, so 4.5% in the US and close to 3% for the German 10-year yield. What does it mean for investors in the fixed income market? It means that probably the next couple of weeks and months will remain quite volatile in terms of interest rates. So you need to be quite tactical in managing your exposure to duration in those two countries. If we take now a longer horizon, let's say 12 months, 15 months, we remain quite convinced that interest rates in those markets will go lower. They will go lower because inflation eventually is going to be going further down, and growth is also slowing down. So of course, some people are saying that there is a lot of supply, new paper will come to the market that might push rates higher, but gradually, as the economy is slowing down, inflation is slowing down, we should see interest rates go lower, both in Europe and both in the US and in the US as well.
Yesterday, we saw news that were pointing towards a 7% interest in yields from Jamie Dimon at JP Morgan. From Alliancebernstein, do you think that could be possible? 7%, it's quite high.
7% is definitely not our base case scenario. I was mentioning the longer horizon. End of 2024, we are more forecasting a 10-year yield in the US around 3%. Okay. Again, for the reason I've mentioned earlier, I think a lot of the discussion about very high interest rates came from this technical aspect, a lot of issuance by the US Treasury, long-dated paper, and maybe not enough buyer for those papers that could then force yields to go higher. But we think still that demands for paper in the US will be met by domestic players and eventually by some clients like insurance companies, pension funds who are happy to lock yields at this level. So this is not our scenario, but obviously there will be some volatility down the road.
Very interesting. And also, Arnaud, talking about another asset class, talking about high yield bonds, they have performed surprisingly well so far this year. How can we explain that? And also, do you think there's some juice left for investors in this asset class?
Yeah, look, I think it's the one big surprise also in the fixed income market for many investors. When you remember at the beginning of the year, we had clients saying, okay, let's go all in safe fixed income. There's going to be a recession in Europe. There's going to be a recession in the US in 2023. And actually what happened is the economy was stronger than what people expected, both in Europe and in the US. So those risky assets like equities, like high yield bonds have done better than people were expecting. The thing is, there was not a lot of supply of new high yield bonds. So there was not a lot of supply overwhelming the demand for high yield. And so the valuations were attractive at the beginning of the year. And so the performance has been actually pretty strong. Now, when it comes to future performance, we are probably saying that now high yield is a bit expensive after this strong performance we've seen so far this year. So we are a bit more cautious on the asset class. We are probably reducing a bit our exposure at this juncture. We are not saying we should sell everything which is high yield now, but I think makes sense to reduce and to take some profit after this strong performance.
Very interesting. And finally, Arnaud, you said before your prevision with interest rates, but during this 2023, it was very hard for investors in fixed income these first 9 months for the performance. Do you think the fixed income markets are going to deliver a better performance during the months that are left this year, or maybe in 2024?
Yeah, I would not say 2023 was very hard for investors. I would say it was a bit disappointing. I think people started the year thinking very excited. And I think we have somewhat postponed this strong performance by 9 to 12 months by having interest rates going higher since the beginning of the year. That being said, now that you have yields in Europe, like on safe bonds around 4%, on high yield bonds around 7%, you have a lot of interest rates that could drive your return higher in 2024. If you believe our base case scenario that interest rates will eventually go down in 2024, that will help stronger performance. So we fully acknowledge that 2023 was not as great as we were hoping for, but I think 2024, now that, again, inflation should normalize, will eventually drive interest rates lower, and that should drive performance to be better than what we have faced so far this year.
We hope so for the fixed income market. Thank you very much, Arnauld Mounier from Alliancebernstein. It's always a pleasure to have you here in Negocios Televisión.
Thank you very much.